Hey Bowtie Nation, Joseph Hogue here with the Let's Talk Money channel, and after 20 years of investing, with more than half of that as a professional analyst, I forget sometimes that the stock market can seem like a foreign language for new investors. I think the analogy is a great one because, trying to read stocks and make sense of it can just seem like a jumble of numbers and percentages sometimes. But just like learning a new language, once you crack it, it's like a whole new world opens up. And Nation, just like a new language, what surprises beginners or investors is that you only need some basics to see a lot of those benefits. When I first came to Colombia to do private consulting around the free trade agreement in 2006, I knew very little Spanish. Nobody spoke as clearly or as slowly as the tapes that I had studied, and by the first week, my head was spinning. But I focused on the basics, the nouns, the tenses, and conjugating verbs, all the things that used to put you asleep in high school, and after a few weeks, I could carry on a conversation. That's what I want to help you do with this video, show you how to read stocks so you can understand that stock market conversation. I'll show you how to read a stock quote and separate out the important information from all the noise. We'll also look at how to use this information to compare and find the best stocks. Now, I'm doing this video as a part of a 3-video series on stock analysis. In our next video, I'll show you how to make sense of those financial statements to dig deeper into the stock market analysis. Then in our 3rd video, I'm going to reveal the 10 financial ratios that every investor must know. I am excited to get into this video because I know it's going to change the way you look at stocks and give you those stock analysis tools that you need. I want to send one last shout out to everyone here in the nation though. Thank you for taking a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. We'll start here with how to read a stock quote, and I'll leave a clickable index in the video description below if you want to skip over some of this basic stuff. I'll be using the stock quote page from Yahoo Finance because it's free and really accessible to everyone, but you can get the same thing on any investing app or platform. So the first thing you see here is the name of the company and the ticker symbol, which is how you find a stock. Now, a lot of stuff here isn't going to be that important for analyzing the stock. The stock price is important, but doesn't really tell you much until you look at some of these other information. So working down from left side first, previous close and open are just where the stock was at the end of the last trading day and where it opened at today. Now, the bid and the ask are pretty much the same for any large company. This is just where someone is offering to buy the stock and the price someone is offering to sell in the market. And there's just so much investor demand for most of these stocks that you'll see that these are going to be very close together. Really, the only time that you'll see a big difference in this bid and ask price is for those stocks of smaller penny stocks. And that's when you want to place what's called a limit order when you buy a stock. That means you put in the exact price that you want to buy it in your investing platform rather than just accepting the price at the market. The 52-week range here is the highest and lowest the stock price has been over the last year. So actually helpful in seeing where the stock has jumped or fallen. You can also see this if you click on the chart to the right for that 1-year time frame. With this volume and average volume number, here we're getting into some of the really useful information for that stock analysis. Now, this is the number of shares exchanging hands on the day, as well as the average for usually over a 20-day period. How you use this is as a confirmation signal for moves in the stock price. So if a stock has a big jump or drop in price, but that day's volume, that trading volume of shares doesn't go much over the average, then how strong was that move really? And the fact that the volume spikes on these changes in stock price, either higher or lower, that's a clue to how much conviction or how much confidence there is in this move by investors. So just remember, big jump in volume means a high conviction for that change in price. Now, daily volume traded, that's below the average volume, means the market isn't quite sold on whatever made the stock move. The market cap is the market value of the company. Now, this is the stock's price times the number of shares available. So what investors are saying this company is worth. That's going to be important when we start looking at our valuation in our 3rd video on ratios. This beta number is an interesting one, but neglected by a lot of investors. Beta tells you the volatility or the riskiness of a stock compared to the overall market. So the market beta, how much it moves up or down on a daily basis, is set at 1.0. And if we look at the S&P 500 fund, that SPY, then we get to see this as a beta of 1. So then a beta above 1, like we see here on Apple, a beta of 1.17, that means shares of Apple tend to move 1.17 times the move in the stock market, both higher or lower. Now, if the stock market went up 1%, then you can expect shares of Apple to increase around 1.17%, and conversely, if the market fell by 1%, then you'd expect shares of Apple to fall by about 1.17%. Now, of course, this isn't always going to be an exact change. Okay, there's news coming out daily that takes shares of Apple higher or lower relative to the rest of the stock market. This beta just tells you that on average, how much more volatile or risky the shares are on that statistical basis. So beta is a really underappreciated tool among investors. How you use this is that if you're trying to put together a safer portfolio, you would look for those stock picks that had a lower beta. For example, if you were investing in shares of Groupon, the stock has a beta of 1.76, which means those shares are going to be a wild ride. If the broader market plunged 10%, you'd expect shares of Groupon to fall by as much as 18%, so much riskier than the rest of the market. On the other hand, shares of the stocks in the utilities sector, so we'll use the Utility Select Sector SPDR Fund here, ticker XLU, this fund has a beta of just 0.44, less than half the market beta. So we'd expect the share price of this fund to be less than half as volatile as the market. Again, if the overall market fell by that 10%, this beta of 0.44 tells us we'd expect the price of this fund to fall by only about 4.4% over the same period. Next, we've got the price to earnings ratio, this PE ratio, and this is probably the most popular metric in investing, but you always want to double check this number that you see in the stock quote. Sometimes the quote page is going to be off a little bit, so look at the company's earnings per share reported over the last 4 quarters, and then divide the price by that number to double check your results. So that PE ratio is just a measure of how expensive a stock is, the price investors are willing to pay for each share of stock compared to how much in earnings the company is making per share. It's a quick and easy measure, but you have to be careful here. There are just a lot of ways that management can manipulate earnings, lots of shenanigans they can play on that income statement and make those earnings look higher. So I will review some of the better price ratios in our 3rd video on that ratio analysis. But if you are using that PE ratio, there's 2 ways that you want to use this. You can compare the stock's current PE ratio. So we see here Apple is trading at about 25 times its earnings per share. But where has it traded in the past? In fact, if we look back, we see Apple was trading as low as 15 times just last year and has been as low as 10 times on that price to earnings ratio in the past. So we can say here that shares of Apple are expensive right now on that PE ratio versus its past historical results. You can also compare the company's PE ratio against its competitors. So here, if we look at shares of Microsoft, you see it's trading at a price of 30 times its earnings per share. So here we can actually say that while Apple may be a little expensive compared to its own PE history, it's still relatively cheaper than those shares of Microsoft with a 25 times PE ratio. This is a big part of stock analysis, comparing some of these ratios against their competitors and even against the broader group of stocks in its sector. That makes it one of my favorite tabs in our portfolio spreadsheet I developed. With this spreadsheet, you can put in 2 stock symbols. So here we'll use Nike and Coca-Cola. Click compare, and the spreadsheet is going to pull all this financial information from the internet. You can compare the price to earnings ratio of a company against the average for the sector as well as against another stock. We've also got the price to sales ratio, some of these profitability measures like the operating margin and the profit margin, and other comparisons for debt to equity and dividend yields. I'll leave a link to download the spreadsheet in the description below. Besides that stock comparison tab, it's going to help you track your portfolio, see some of the gaps in your investments, and plan for your retirement. Just a few more notes on this stock quote page here. This dividend and the dividend yield is the amount the company pays out on a yearly basis. So Apple pays $3.28 in dividends per share over a year, and then divided by the stock price for the dividend yield. So that $3.28 divided by 319 per share means Apple pays a dividend yield just over 1% a year. And remember, that's paid on a quarterly basis. So you're going to get about 82 cents a share every 3 months. This 1-year target estimate is nice, but you have to take it with a grain of salt and do your own analysis. This is the average target price from Wall Street analysts tracked by Yahoo Finance. Now here you see that the analysts have a target price of just under $309 per share for the next year, which just kind of confirms the idea that Apple is a little bit expensive here at $319 a share. But if we look at the analyst estimates on my E-Trade account, we see an average target price of $318 a share. So this average is always going to be subject to the analyst polled and whether they've updated their information. So use this only as a confirmation or a check on your own analysis for the stock. Click on the video to the right for the next in our How to Read a Stock series, a step-by-step in stock analysis and financial statements. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.